If you are still paying a financial advisor 1% of everything you own every year, this video is going to be uncomfortable because 5 AI tools have quietly built most of what your advisor charges for: portfolio rebalancing, tax optimization, financial planning, even personalized investment research. Some of them are completely free. Some cost less than a streaming subscription. And in 2026, they are starting to outperform their human counterparts on the boring tasks that justify those fees in the first place. Before we go further, a quick note. This video is an educational comparison of public software products. Nothing here is financial advice or a recommendation to invest, divest, or change advisors. Every figure mentioned comes from the official websites of the tools being reviewed. Always do your own research and treat your money like it is your money. With that out of the way, let us look at the 5 tools that are reshaping personal finance, what they actually do, what they cost, and which one fits which kind of investor. First, some context on why this is happening at all. Traditional financial advisors typically charge an annual management fee of around 1% on assets under management. On a $100,000 portfolio, that is $1,000 every year, regardless of performance. According to public industry surveys, most of what advisors do for that fee falls into 3 buckets: asset allocation across stocks, bonds, and cash, periodic rebalancing back to a target mix, tax loss harvesting, and basic financial planning. The honest reality is that none of those 3 tasks require human judgment for most situations. They require rules, discipline, and execution, which is exactly what software is good at. And in the last 2 years, a new generation of AI-driven platforms has moved past the basic robo-advisor of 2018 into something much closer to what a real planner would offer. Let us start with the most established player. Tool number 1 is Wealthfront. Out of all the platforms we will cover, Wealthfront is the most mature. The company has been operating since 2008, currently manages over $50 billion in client assets, and offers what they call a digitally automated financial planning service. What that translates to in practice is an automated portfolio built on diversified index ETFs, weighted to your risk profile, with automatic rebalancing and tax loss harvesting built into the engine. The numbers Wealthfront publishes on their site are these: a flat management fee of 0.25% per year, no trading commissions on your portfolio, a minimum opening balance of $500, and tax loss harvesting that, according to their published methodology, can offset a meaningful portion of the management fee over time for taxable accounts. What they do that a traditional advisor typically does not: direct indexing for accounts above $100,000, which means owning the individual stocks of an index rather than the fund, so the software can harvest losses at the individual security level. They also run a high-yield cash account paying a competitive rate, and a path tool that lets you simulate retirement, home purchase, college, and other long-horizon goals using your actual data. Where Wealthfront is not the right pick. If you want a real human to talk you off a ledge during a market drop, Wealthfront does not provide that. There is no relationship manager assigned to you. The platform assumes you will trust the rules, follow the plan, and not panic. That is a real psychological difference and worth being honest about. Tool number 2 is Magnifi, made by a fintech company called TIFIN. Where Wealthfront is mostly about set-and-forget portfolio management, Magnifi targets the next layer up: investment research and discovery, using a large language model trained on financial data. The interface looks almost exactly like a chat window. You type a question in plain English. For example, find me low-volatility dividend ETFs with at least a 10-year track record and an expense ratio below 0.5%. And Magnifi returns a structured list of funds and stocks matching the criteria, along with comparison charts, historical performance, dividend yields, and basic risk metrics. What this replaces, in practical terms, is the part of an advisor relationship where you ask, "What do you think about adding emerging markets to my portfolio?" And they go, "Pull a research report." Magnifi does that without scheduling a meeting. The pricing as published on their website is a freemium model. Basic search and discovery is free. Their Pro tier, which adds portfolio analysis, deeper comparisons, and AI-assisted alerts, runs at a monthly subscription comparable to a streaming service. No trades happen on Magnifi itself. They integrate with your existing broker for execution. Where Magnifi falls short, it is a research tool, not a planning tool. It will not tell you how much to save, what your asset allocation should look like, or whether to convert a traditional IRA to a Roth. For those questions, you need a different category of platform, which brings us to tool number 3. Tool number 3 is Composer.trade. This is the tool that, more than any other on this list, makes the case that AI has actually changed what individual investors can do with their own portfolios. Composer lets you build, backtest, and deploy automated investment strategies, what the industry calls quantitative or rules-based strategies, without writing any code. You describe the rules in their visual builder. For example, if the S&P 500 is above its 200-day moving average, hold a basket of growth ETFs. Otherwise, hold short-term treasuries. Composer translates that into an executable trading algorithm, backtests it against years of historical data, and then, if you connect a brokerage account, runs it automatically with daily rebalancing. This used to be technology reserved for hedge funds. Composer brought it to retail. Their published pricing is a freemium tier for backtesting and strategy building, and a paid tier, currently around $30 per month, that unlocks automated live execution and access to a library of strategies built by other users. Some of those user-published strategies have public track records that anyone can review before subscribing. Where Composer is genuinely different, it forces you to think about investing as a system, not a series of stock picks. The downside is that the same forcing function is also a barrier. Composer assumes you understand what a moving average is, what risk parity means, and why a strategy that backtests well from 2015 to 2021 might still lose money in a regime change. It rewards people who are willing to learn. It does not coddle. Tool number 4 is Origin. This one is positioned specifically against the traditional financial planner, not the index fund, but the actual person you would pay several $1,000s to write you a financial plan. Origin packages comprehensive financial planning, tax filing, budgeting, investment management, and access to certified financial planners into a single subscription. Their public pricing on the Origin website lists a flat annual fee, currently in the low hundreds of dollars per year, which is the headline differentiator versus the typical advisor model of 1% of assets. To put that in concrete terms, the published rate for Origin and the standard 1% advisor fee converge at around the $20,000 portfolio mark. Below that, Origin costs more in absolute dollars. Above it, the advisor costs more. For a household with $200,000 invested, the difference is $2,000 per year flowing to fees, every year, compounding. What Origin gets right, they actually have human planners you can talk to as part of the subscription, not just AI chat. They handle the boring stuff, like filing taxes inside the same platform, which most robo-advisors do not. And the financial plan they produce is comparable in structure to what a fee-only fiduciary planner would write. Where they are weaker, Origin is newer than Wealthfront. The investment management options are slightly more limited, and the platform is best suited to people who want comprehensive planning, not just portfolio management. If you only want the portfolio piece, Wealthfront is more polished. Tool number 5 is the wildcard, ChatGPT, specifically with Custom GPTs built for personal finance analysis. Out of every tool on this list, this is the one that started as a general assistant and is being shaped in real time by the open community into a surprisingly capable financial co-pilot. You can paste your statements, your budget, your portfolio holdings, and ask ChatGPT to analyze concentration risk, suggest rebalancing trades, build a tax projection, or model a refinance decision. With the right prompt, the responses are detailed and the math, in most cases tested by third parties, comes back correct. The published cost is $20 per month for the Pro tier. The library of community-built custom GPTs for personal finance, retirement planning, real estate analysis, and stock research is constantly growing and free to use inside the subscription. Where ChatGPT is dangerous to lean on, it does not have access to your live brokerage data unless you give it. It can hallucinate, especially on niche tax questions or specific securities, and it has no fiduciary duty. So for things like buy this stock, it is a brainstorming tool, not an oracle. Where it shines: second opinion, plan critique, scenario modeling, education. Pair it with one of the 4 dedicated tools above, and you get capabilities that a $500 per hour planner would have charged for 10 years ago. So let us put this together. If you want fully automated, set and forget portfolio management with tax optimization, Wealthfront is the cleanest pick. 25 basis points, no human required. If you want to discover investments using natural language search, Magnifi. If you want to run your own algorithmic strategies with backtesting, Composer. If you want comprehensive planning with human planners at a flat fee, Origin. And if you want a generalist co-pilot for any financial question, ChatGPT with the right custom GPTs. The smart play in 2026 is not picking one and abandoning the others. It is layering one tool for execution, one tool for research, one tool for second opinions. That is what your old financial advisor was supposed to do, packaged into a single bill. Subscribe if you want me to dig deeper into any one of these tools. There is a full Composer strategy breakdown and a Wealthfront direct indexing review coming up next. Links to every tool in the description. As always, do your own research and treat your money like it is your money.